In this video, we're going to look at price action trading for beginner traders. So we're going to look at what price action trading even is and how traders use price action to help them make buying and selling decisions. So price action falls under technical analysis because we're looking at the chart. We're using candlesticks as a visual representation of how the price moves over a certain period of time. So in price action trading, we're looking at the candlestick. We're looking at the different candlestick types, the different formations, the chart patterns, and the way that they move on the chart. This all falls under price action. The great thing about price action trading is you can use it on every single market type. If you're looking at candlesticks, you can use price action trading. So we're going to head over to Thinkmarkets now, and we're going to look at some of the very basics of price action trading for beginners. If you are excited to learn, make sure you hit the thumbs up button before we get started. So first of all, we're going to really understand candlesticks because they're at the heart of price action, and we need to really understand candlesticks fully to understand all the rest of it. You'll probably have noticed straight away there are red candlesticks and there are green candlesticks, and also that there's a thick part and a thin part. So let's look at what this all means. The green candlesticks are candlesticks which closed higher than they opened, and the red candlesticks are ones where they closed lower than they opened. So effectively, a green candlestick is making a push up and a red candlestick is making a push down. Or that the price is increasing with the green candlestick and decreasing with a red candlestick. The thick part is called the body, and it shows us the open and the close over a certain time period. At the moment, we're on the 1 minute chart. So at the start of the minute, on this green candlestick here, the price started at the bottom of the thick part, at the bottom of the body. It went down to the end here, all the way up here, and then it closed at the top of the thick part. So this is the open and the close, and the thin part is the extreme. The red candlestick, because it closes lower than it opens, it starts at the top, went all the way up here, went all the way down here, and closed up here. How big the candlesticks are is important, and also what the body to wick ratio is also important, because the wick signals a lot of uncertainty and also volatility, whereas the body signals a lot more certainty. So there are so many different candlestick types, but we're just going to go into the basics in this video. A candlestick which has a lot of body and not much wick is quite certain about the direction it's going in. A candlestick which has a lot of wick and not much body is less certain. You also have candlesticks called doji candles, which is like this one here. Can you see it's got hardly any body at all and is more or less just wick? These ones show a lot of uncertainty because the price moved up and down and then it closed almost exactly where it opened. These show quite a lot of volatility, although they don't look like it because they're very thin. Actually, the market moved quite a lot in that time period. In that minute, it went all the way up there, all the way down here. It just didn't know where it was ending up, so it ended up exactly where it started off. So now let's have a look at trends, reversals, and consolidations, which all comes under price action. You might have heard the saying, the trend is your friend until the end. That's because traders are quite fond of trend trading, because it can be seen as being easier and less problematic. And candlesticks and price action can help us to determine whether we are in an uptrend and we're looking for a buy position, or if we're in a downtrend and we're looking for a sell position. So I've just switched to the 4-hour chart now to show you the very basics of trend trading. When you're looking for an uptrend, you want to be looking for higher highs and higher lows. Can you see this uptrend here? As it moves up, the lows become higher. So these are the lowest points and they're becoming higher and higher. And also the highest points are also becoming higher and higher. This signals that we are in an uptrend, and perhaps a trader might want to look for an opportunity to get into a buy position here. Let's move along now and look at when the market was in a downtrend. Can you see that the lows become lower? So what you're looking for in a downtrend is lower lows and also lower highs. Can you see here, we've got lower highs coming down. So a trader might start looking for an opportunity to get into a sell position when they see lower highs and lower lows. Sometimes the market's not in a trend at all. Sometimes the market is in a consolidation. Here the market will almost fit into a nice rectangular box going sideways. It neither makes higher highs nor higher lows. That's how you can distinguish as to whether you are in a trend or in a consolidation. So often consolidations don't really offer the best opportunities at the time. However, there are often good opportunities coming out of a consolidation because this is where you often get breakouts or reversals, which we'll cover in a minute. On Thinkmarkets, you can click on this symbol here and find the rectangle tool. And if it helps you, you can draw a little box around the market and see if it fits within the box. This can help you to distinguish whether you are actually in a consolidation, because the market should stick within this box and not be making higher highs or higher lows. When you can see the market breaking out of it, that's when you realize you are moving out of the consolidation and into a possible reversal, which brings me nicely onto reversals. Often another thing that you can look for as well, apart from breaking out of the box, you can also look for what's called imbalanced candles. So imbalanced candles are usually long-bodied candles. Remember, we discussed the body and the wicks. The body is the thick part and the wick is the thin part. We're looking for the body to break out of the consolidation rather than the wick. When the wick breaks out, that can actually show us that the price is being rejected at that level and tells us a completely different story. What we're looking for is the body to break out of that level. And often that can be the start of a trend in a new direction, otherwise known as a reversal. So now you understand the basics of price action for beginners, you're ready to look at the different categories in a little bit more detail. So in the next video, we're going to be looking at trend trading. So if you don't want to miss that video, make sure you hit subscribe to Thinkmarkets now. And also if you click on the bell button, you'll be notified when any new videos are released and you won't miss any of them.